Welcome everyone.
Okay.
Today we have new episodes and we have our new friend, Mr. Jamie. Uh, he is actually live in Malaysia. We have Professor Donalds, we have Markley, and we have Mr. Ahmed, and some other guests also will join soon. Anyway, we want to discuss about the future of investment, and we have all of the expert guy from around the world. But initially, I just want to start from Mr. Jamie. Can you please introduce yourself and what your experience about investment? Then I will go to Professor Donalds, then Mr. Markley, and Mr.
Oh,
Jamie.
yeah. Can you hear me now?
Yes.
Yes. Okay. I spent 57 years in the commercial aviation industry. The first 45 as a pilot, as an airline pilot, and the last about 10 as a flight simulator instructor. I'm 78 years old, and I finally got myself out of work due to COVID. Not a good background on investment. I have to.
Mr. Jamie, can you hear me?
Okay,
I think
yeah.
he has some problem with the internet, so I directly want to go for to Professor Donald. So you are very experienced in terms of technology and investment. How do you want to analyze this point, specifically the future of investing?
Well, it's important to understand that there's different aspects to investing. So one aspect of investing would be, for instance, a venture capitalist firm or an angel investing in a startup. But at the same time, anytime you buy stock in a company, you are investing in that company, maybe a teeny bit. And if you look at who's actually investing in companies, when you get to that level, you find that there's these huge funds. There's sovereign wealth funds. The biggest sovereign wealth fund is Norway. And there's also mutual funds. For instance, in the United States, I don't know, I was going to look it up this morning, but for a long time, the biggest investment fund in the United States was the Teachers Union in the United States. California's Teachers Union. And
I can see you, but I cannot hear. It comes in broken. So I would rather let you go ahead with the session. You can leave me there. Maybe I'll pick up something, but I don't think it's worth your time to keep on trying to me.
Okay. You can share your views and you can stay with us. But if you do not feel comfort, so you can leave, no problem.
Okay. Professor Donald.
Okay, so there's a synergy between these things, because ultimately what winds up happening is that as a company grows, it requires money for growth, and the place that it gets that money for growth goes beyond the venture capital firms, and it goes into investment banks. And once when I was at Stanford, somebody drew a graph that showed the flow of money in the United States to startups in Silicon Valley, or not just startups, to companies in Silicon Valley. I mean, Apple gets a lot from the public markets. And there was this gigantic arrow, there's these arrows from here to there. And then there was this gigantic arrow that went all the way across the country from New York to Silicon Valley. I mean, it practically obscured the country because there was so incredibly much money that's flowing from the basically public markets. And so I think that for the developing world, that one of the things that is happening now, I looked it up last night, and at one time in the 80s and even 90s, almost all venture capital in the world was in the United States. But now it's gotten to the point where the United States is only half. And I put that only in quotes because we're 4% of the population of the world, but we're half the venture capital in the world right now. But countries in Asia, especially China, have robust venture capital markets. And those need to be combined with political stability, because ultimately, if you're lending somebody money, you have to have the social structure to assure that they'll pay you back. You have to be able to sue them. You have to be able to do all the different kinds of things. And there has to be laws that they have to pay you back. So there's a combination of stability and will that's required to create the kinds of markets that are needed for people to invest. And I'm going to end with saying that the people that invest in these firms, what they're doing is it's their pension funds. In other words, they pay in every month to a retirement fund, and so the money that's there is actually the money that people are going to use to live on in their retirement. So that's why stability is incredibly important. Okay, thank you.
Thank you, Mr. Markley.
Well, I don't have the kind of experience that Jim, Eid, and Donald have in terms of investment, because y'all are master investors and all of that. My world of investing was actually a lot different. I remember as a kid, and I'm in my late 50s now, but we decided to get those lovely saving bonds and things of that nature, which is a way that a lot of folks would get their kids investments. And I need to check with my dad and see if that savings bond is still around or not. But I know that that's one of the things that was going on in early investment. And then another thing, kind of coming back to what Donna was talking about, was I actually, as a child, came out of the world of nonprofits. My folks decided at a very young age, for me, I was a preteen, that they wanted to start a community radio station because they realized that there was not enough people putting out the kind of news or the kind of music that they would like to hear. So they decided to invest in the radio business and create a radio station with no experience in that field. So a lot of folks would say that that's not the best way to do a startup, not doing something that you don't have experience in, but they decided that they were going to tackle it, and it actually lasted for 12 years and is still considered one of the premier examples of a nonprofit radio station that existed without like the support of a college or a public institution behind it. So a lot of times there's even been case studies around WVSP and the way that it operated in a very rural town. And it was actually because of the economy, because y'all remember that I said it was started around Independence Day in the 70s, like around 76 or something like that, that it was in the mid to late 80s, when we had another one of our economic crisis, that we weren't able to get as much of the public support, because with a public radio station, you need public support. So a lot of that support kind of dwindled down, and then there was not enough money to sustain the station. So the station was eventually sold, and I want to say it's connected to North Carolina Wesleyan right now and everything. But I know that they were one of the folks that were involved with it, which is a college, a small college in Rocky Mount, North Carolina. Like I said, it started in Warrenton and then moved to Rocky Mount. So like I said, my kind of way into investment has been kind of the back-ended way and all of that. But I am always looking for opportunities and things along that line to see about new investments. And I'm finding that a lot of people are even looking, and me and Jim have talked about this before, at how even the internet has opened up a lot of opportunities for investment, whether that's people that are big on crypto, and I'm still doing my research on that and everything, or whether that's even looking at investing into new projects. I'm thinking that we're going to see a lot of new things coming out of this whole hybrid community that is being created with people doing stuff partially at home and partially at work. Like I mentioned as we were starting this chat in the pre-show kind of conversation, I've been doing some conferences, and part of these conferences are using the same platform that we're using, StreamYard, and basically just doing a plug and play. The people that are organizing it are actually the ones that are doing the creation of the guests, the creation of the content, and then it's just kind of like my job to engineer it and make sure that it's happening. So that's another form of investment that I have been using this platform for, is a way to kind of like find new tools to make some new capital.
Thank you, Mr. Jamit. Yeah.
Yes, thank you for the opportunity, and thank you for inviting me on this show. The first thing that I would say is don't listen to any talking head on your TV or your computer monitor, because the best economists out there have the best excuses for why their predictions have failed. And there's an old joke, I'll get it wrong, but it's something like the economists in the world, the best economists have predicted correctly 9 of the last 3 recessions, because they just don't know what's going to happen. No one does know what's going to happen. That's where we have to start from. And the next question you have to ask yourself is, what is my investment objective? If you're not clear on what your objective is, you are not going to make a rational decision about how to arrive at it. And so if you're listening to someone else and he says, oh, that's a good idea, I'll do that, you probably won't be successful. If you're not clear on what it is you want to do, you have less chance of being successful. So the investment strategies that you want to adhere to are the ones that fit you best. And if what fits me best may not fit you best. And what fits you best may not fit me best. So these are all internal decisions. We have to look inside ourselves and to see what is it that we want. If it's a radio station, make a radio station. If it's a StreamYard telecast, make a StreamYard telecast. You have to, and I want to just double down on what Professor Donald was saying about stability. And stability is necessary. The markets hate uncertainty, and they react badly. So stability is very important for market stability, for investment purposes, for your investment to be sound. And the country that is probably the most stable is China. And what you need for growth is resources. And the resources are in Africa, and China is doing the best job of going to Africa and getting those infrastructure, getting those resources by building infrastructure there and making investments into the country that does not that has resources but does not have the ability to exploit them. So these are things that are happening in the world today. And the United States right now, we're going through this pandemic, but we're also going through a crisis of instability of where we want to go, what we want to be as a country. And so you will have these people that will tell you, you have to deregulate. We want unregulated free market capitalism. That is the golden idol that we worship at. Now, this makes no sense. Now, I can remember back in the 60s, people were telling us that don't stop people from putting pollution into the rivers because it costs you jobs. Well, it wasn't until a river caught on fire, and water doesn't burn, it boils. So what was burning was the things we were putting into the river. And so now we're experiencing this with things that we were putting into the air. And this is resulting in a global climate change, which is having incredible economic consequences. So these things are things that we have to regulate. Sorry, it's a 4-letter word now, but we have to have regulations to produce stability, to make your investments solid and predictable. Thank you, Sharif.
Thank you. Yes, Mr. Martley. Yeah. Unmute yourself.
Unmute myself. I said I was going to add to something that Jim was talking about and everything, because we oftentimes will, even back in the old days, tag team on each other and make some comments that were very similar and everything to each other. But one of the things that he was talking about was the need to kind of like look at the economy as a global economy. And I'm seeing more and more of that. As I was saying, the streaming conferences I was doing were actually both economic conferences. One was called the Black Business Olympics this time, or Black Business Empowerment. The first time that we did it in November with my good friend Eric Kelly. So it was an African American economic conference, and another one was an empowerment event, similar kind of target market that was in the town or near the town of Greensboro, North Carolina, and all of that. But there were definitely a lot of conversation within that about the need to reach out to within the what is considered the diaspora community, which is like the African American community, but those that have branched out into other parts of the society, to those other parts of that society. So not just kind of like staying in a narrow focus that if you were creating a business in Harlem, and I'm just using Harlem as an example, that you would just do it strictly in Harlem, but that you would reach out to folks that were also, say, in Ghana or in Kenya or in Cuba or in Jamaica or in a number of the other parts of the world that are definitely becoming more target markets. I would even argue where you are, Sharif, Malaysia is becoming a major target market as well. So definitely it's a need to look at the entire community in a global sense.
Thank you. Professor Donalds, unmute yourself.
You're on mute. Did you mute him, Sharif?
Sorry, I was having trouble
No.
finding it. I was in a different window.
Okay.
Anyway, yeah, well, I mean, this is on the future of investment, and I think that what Mark said is part of the future of everything. When we've got a lot of nativism going around the world right now, where people are trying to put up walls, and I'm always for building bridges, not walls, and but it's not going to work. I mean, I remember that way back before the wall came down, the wall in East Germany and between East Germany and Germany, and the basically wall around the Soviet Union. I predicted to people that I said, what's going to bring down that wall isn't military force, it's blue jeans and pop music. Mm-hmm. And that's actually what wound up happening. And I want to say to Mark, I know voice serving people, your radio station, some of the really great hybrid music comes out of your area. And yes. So I'm just wondering if you're the one who put the jazz into the bluegrass to come out with a great Americana music that so much of it comes from your part of North Carolina, but that's complete side. And anyway, there weren't markets in the 90s in China. There weren't stock markets. If people wanted to get on the stock market, they'd have to come to the United States. That was the only stock markets. But now China has a very strong and robust stock market. There's the change. Oh yeah. And the other change that's happening in investment industry is that it's getting to be conscious capitalism is one way to talk about it. And it's not a binary thing like the Republicans claim right now, that it's either laissez-faire capitalism or socialism. It's not that way, because all the time, always, our economy has had degrees of control. Even when people tried to stop it, when they were against Keynes and they were trying to go all Milton Friedman on us, it never really happened, because it can't happen. Ultimately, if the Federal Reserve doesn't have some influence on inflation, then what winds up happening is we get this horrible inflation like we had in the 70s. And like when we went into the Carter administration, the inflation the interest rates went up to 21% because they just had to stop the inflation. It was just so incredibly bad. And that created a huge recession, which lasted for a while and did in Carter, basically. But now more and more investment funds are divesting themselves of petroleum. They're looking at countries that are, doing huge human rights violations, and they're stopping investing in them. I mean, and who is responsible for that? Well, it goes back down to what I said, is that ultimately the funds are the funds that lots and lots and lots and lots of people put in a little bit for their retirement. So as I said, CalPERS, the California Public blah blah blah, was the biggest fund in the world. And all it is the retirement pay for the biggest state in the world. I mean, in the United States. And when the people that pay into that fund start saying, I don't want my money to support petroleum. I mean, I don't want my money I don't want to be paying to end civilization. It's just not what I want to do. Then the fund managers start looking around and saying, okay, we're going to invest in things that are that align with the people that are investing in us. And so that's one step towards conscious capitalism. And thank you.
Speaking of conscious capitalism, I did have a quick question, Sharif. I know you got tons of them, but I was wondering for both Jim and Donald what their thoughts are about, well, one, I had mentioned earlier, I've heard a lot of people talking about crypto is the new wave and everything in investment, and that everybody needs to go buying off and rushing off into these crypto coins. I have not done that. Don't know that I plan on doing that. I'd rather possibly invest in a friend's gaming company, which I am looking at doing, and everything, meaning a video game company. But then I've also heard a lot of people talking about, and there have been a couple of cases of it, of employee-owned companies. And I was wondering, do you think that that's a wave of the future, that we're going to see more employee-owned companies where the employee is being given an opportunity to actually buy into the company and own shares within that company? So I guess I'll, since you talked already, Donald, I'll give it to Jim, but then come back to Donald. And then Sharif, you can take it back over your old show.
Yes.
Thank you, Mark. So I'll pick up on that. And crypto is the latest example of something that I have always used as a personal investment philosophy. If it's hot, don't buy it. And it's too late. When you're hearing about it, it's too late. If you got in early, bravo for you. But don't get in at the top. That's the way to loot. You can make a small fortune out of a large fortune that way. So these things, it's all timing. It's all when you get, when you get in and when you get out. These are the things about investments. Don't let greed overcome your fear. Your fear of losing money has to be valued as much as your greed for making money. So, I always say, if I got in, I made a good choice. Like, for example, Tesla. Got in Tesla very early on, and Tesla had these wild market swings that drove me absolutely insane. But I kept investing in it until I hit my target goal, what I thought was the right price for me to make as much money as I wanted to out of a Tesla stock, and I sold it. Now, of course, I could beat myself up because Tesla has soared beyond my wildest dreams. But there's no sense in being regretful of your past decision making. You just do what you know is what works for you. Have confidence in your own ability to assess the situation and act accordingly, and don't regret the past. These are the things that I have used to keep myself sane, investing my own and my wife's money in the stock markets. But the thing is that everyone must understand is that there is a correlation between bonds and stocks. And if and right now the bonds are not paying worth a darn, so people are pouring money into stocks. So stock prices are unreasonably high. Now, when the bond prices start to go up, the stock prices will be affected. That is the historical pattern. Mm-hmm. Don't go by historical patterns, because who knows what's going to happen in the future. But you have to understand that if these bond prices start to edge up, be wary. Then you might want to cut back on your stock investments before it's too late. Because when the bond prices reach 21%, or what they're paying is 21%, it's too late to sell. People have already sold. And you're going to be getting rock bottom prices for your stocks. So you have to anticipate what's going to happen, but you can't predict the future. So you just have to make your educated guesses. And your educated guesses get better with experience. So get started small. Invest small at first. Look to see if their choices are good or poor. If they're poor, learn from them, make better choices, and then make your investments as your decision making gets better, make your investments more significant. But never play with money that you can't afford to lose. This is the fundamental rule of investment. Do not play with money you cannot afford to lose. And it's the same thing with gamblers. You know, if you gamble with money you can't afford to lose, it's a losing proposition. So if you are playing with house money, then have fun, enjoy yourself. And when you have an investment that soars, take some off the table. This is the investment strategy that always works. If you have made money, take back what you've invested in, and then you're playing with house money. Then you can't afford it. You will not lose. You have already taken money off the table. So this has made me a very confident and secure investor in my life. And I would only advise you to find out what works for you and then do that.
Thank you. Yes, thank you. Professor Donald, I have one specific point, especially when we think about future of investing. And even in the COVID-19 situation, we saw, even though we have many banks, we have many financial institutions, we have government, we have policy, we have research, but we forget that we have to invest in our healthcare system. I think every country actually suffer for that. They do not go for much investment in their healthcare system. So what do you think? Whole world, researchers, policymakers, politicians, corporation, what they are doing, how they're making their plans. Even in the COVID, we say that we are in modern stage of science, engineering, and technology. But in the COVID period, we find many of our relatives, our friends, many people around the world, millions of people, they lose their lives, and we are actually helpless. So what do you think? We should reform our investment strategy or what?
That's an interesting question. And I want to start to go back with what I said about stability. And right now, and to talk about stability, I can actually go back and address one of Mark's questions, which is the thing about cryptocurrency. If you buy cryptocurrency, what are you buying? I mean, what exactly, you take your money and you invest it in cryptocurrency, how is the world a better place? What has been made by that cryptocurrency that improves the lives of human beings? Ultimately, you're just investing in money. You're basically investing in money and making money on money. And that, I think, is one of the biggest destabilizing things that's facing us right now. People with large funds, if you take your money and you invest it in a business, that is incredibly risky. Even the best venture capitalists are wrong 80% of the time, at least. And so what you can do now instead is, with the artificial intelligence and other kinds of things they call fintech, they can do things like sell stock in Europe, and in the microseconds that it takes for the electronic signal to get across the ocean, they can know that the stock is going to decrease in value because people are trying to sell it, and then they can sell it short and make money like that. And they don't even have to do it anymore. They've got computer algorithms that are doing it for them. So this money just grows and grows and grows and grows and grows. And somebody who has money doesn't have an incentive to invest it in the world and into our society, or things like healthcare and other kinds of things that we need to have. And as I said, stability is absolutely necessary. And it's been shown that the greater the wealth disparities are, the less stability there is. Eventually, it reaches a threshold where it always, I mean, you know, as James said, history doesn't always predict the future, but it's definitely a concerning thing. Let's see, you asked another question, and there's been enough questions along the way that I forget, but I should have jotted it down. But the about employee-owned businesses. Now, I think that's in the cases I know where people have done that, in the cases where people wind up having more job satisfaction and they're more dedicated to the company. And ultimately, if we all look at Steve Jobs as like this, taskmaster who was mean to everybody and, beat people up and stuff like that. And that sort of becomes a model for companies. The idea that, there can be the CEO who controls everything. But Jobs is the exception, not the rule by a long shot. And they've shown that ultimately, if you have a company and you're being kind of nasty to all your people and not valuing them and stuff like that, they all get passive aggressive, or most of them get passive aggressive, where they do the minimum amount of work, they do the exact amount of work that they're going to do under those circumstances. If you have something where it's ownership, in fact, even as a manager, you need to talk to your employees. You don't say, do this. You say, what's the best way to do this? Right. You ask them. And then when they say, and there's probably one or two best ways to do it, and they're going to say the exact same thing that you were going to order them to do. But since they thought it up, you say, oh, wow, you're just the person to do this. Would you mind doing it? Would you go ahead and do it? And they're like, yeah, they'll work until the middle of the night doing it because it's theirs. And so I think that that's an important thing with companies as well. Now, the whole issue of healthcare, I don't think it's 100% true that all countries failed, because New Zealand and Australia and like I said, I have clients in Japan right now. I talk to them, talk to a variety of Japanese people several times a day, and there was only 7,000 deaths in Japan, as opposed to what is it now, 530,000 in the United States. And so I would say that their healthcare system is better than our healthcare system, at least in that respect. And many countries did a lot better than, in fact, all countries did better than the United States. And so I think that goes down to just how people think about things. I don't know. I think that this more idea of conscious capitalism is an important idea, and people have to realize that they need to contribute to the society that they're in. Finland had virtually no cases. Many of the Nordic countries did too. And then I want to say one other thing. I'm on and on here. Sorry for taking so long, but I have a friend who is nominated for the Nobel Prize in Economics, and I know he'll get it eventually. He's incredibly cited a lot, and his investment strategy is to buy a variety of index funds. In other words, basically what he's doing is he's investing in the fact that the market is going to go up. And rather than try and guess when the market is going up or guess which companies are going to be the ones that are going to make the market go up, he simply invests broadly in the whole market. And it's well known that if Donald Trump had done that with the money that he inherited, he would have far more money than he does with his stupid mistakes that he's constantly making. So I think that for most people, the best investment strategy is to find some mutual fund that does that and invest your money in that mutual fund, and then just don't look at it, because that it'll go up and it'll go down, and if you look at it, you'll freak out. But if you just stand off, it'll just go up over time. And so I think for most people, that's the way to go.
Mm-hmm. Thank you, Mr. Martley.
Yeah, I was wondering, and this is for everybody, including you, Sharif. Do you think it's a good idea to invest in medical companies right now? Because I'm sure that a lot of people are probably right now thinking of Pfizer. They're thinking of a number of other companies. I know Pfizer's got some offices here in North Carolina where I'm at, and definitely they're thinking about. I can't think of the name of the company. Jim, correct me with the name, but it's the one that begins with an M. That's also got one of the vaccines as well. But definitely, what folks are thinking about whether they should invest in those or not, because from a conscious standpoint, I'm thinking that some people may be trying to invest because they're hoping that not only will they succeed with the vaccine will definitely get the herd immunity that we all want, and we'll all be able to go back out to the concerts that I definitely want to go back to and everything. Yeah. But that they'll also be like looking at other cures of diseases that have been out there even before COVID, and hopefully those will now be put at the forefront. So maybe all of this research will lead to, say, a cure for cancer, will lead to, say, a cure, an actual cure for AIDS and things along those lines. So I was just wondering, do you think that it's something that a conscious investor should even be thinking about investing in our medical companies as they're doing more and more research?
I want to say one little thing about this. Just one
Okay.
little thing. My clients in Japan all work for Gilead, which is one of the bigger drug companies. And they told me something the other day that just totally killed me. Is they said, well, the COVID vaccine is actually a very bad product because it works. And if you have something that works and starts curing people, you wind up selling less and less and less of it till you don't sell any at all. So I think just having a really, really successful product is not necessarily an indicator that the company's going to do better. I just had to throw that in.
Yeah,
Thank you.
That's classic. Yes. And I think, Mark, you were looking for the word, the company Moderna.
Yes, that's
the other. Yeah. And, this is a really tricky subject because, as investments, and certainly I'm not advising anyone to invest in anything, even a sector. But the idea of investing in medical things, it sounds good. But, some of these pharmaceutical companies, if you want to be a conscious investor, they're not the way to go. Some of these companies are actually just making profits off of something that people really desperately need and will pay anything for. And do you want to be part of that? I don't. So, you have to use this. And I love being on the shows with Professor Donald because he says so many things that I agree with, but I always learn something because I've always described myself as a mixed capitalist. To separate, I do believe in competition. I do believe this is good, but we also have a responsibility to those who do not have resources. If you have resources and they do not, share them. Why not? And so it's a mixed capitalism, but he has said the words conscious capitalism. And I think that's an improvement over my mixed capitalism because you want to be conscious of what you're doing. You want to be aware. But the information you're going to get out there is very confusing sometimes. It's very unclear. You say, I want to invest in medicine. Well, this medical company is not worthy of your investment. How do you know? You have to do your research. These become very difficult questions to answer. And there is no, right or wrong, because all of these things, like, they build in what they call, planned obsolescence. They want you to use this and want it, and then you want it to be unusable in the future, so you'll buy more of it. So is this evil? No, it's, not evil, but it's a way to make money. So if we're going to, make the golden calf our idol and chase that forever, we're just not going to be a just society. So we have to balance things. And this is what I meant by mixed capitalism. We have to have the idea that compete, do better, get the best out of everyone, and certainly make your way in the world. But does anyone really need to have billions and billions of dollars at the expense of those who cannot feed themselves? I think that's not a just society. It's not the way I would describe it. So we want to do these things, and we want to build bridges, not walls. I'm quoting Professor Donald again, because one of the proudest moments.
I stole it from you. I stole it from you.
Yeah.
Oh, y'all stole it
all
from each
goes
other.
back.
I'm liking this.
Yeah,
Jim,
it goes back and forth
Yeah,
because
Jim, but you bring up a good point and everything with the whole, just trying to be conscious with our capitalism and things of that nature. One of the things that has often been talked about within the minority community, like I said, it's come up in several things that I've been a part of and everything, is this concept, and I'm glad to say that my parents actually, and particularly my mom, has done a good job of it, but I would even argue my dad as well, of generational wealth, which means that definitely not just getting the land, but also keeping the land, of you passing it on from generation to generation. And I think that we don't see enough of that going on in the various societies. I would argue just about all of the societies of the world are not doing a good enough job of passing on that generational wealth. Like I said, I know my mom, I want to say it was a few weeks ago, had a meeting with her sisters, the two remaining sisters, because she had three and one passed away not that long ago. But her and her two remaining sisters, they were meeting about selling the timber. They were not going to sell the land. They were going to sell the timber because you can reseed the timber and then keep that land there to pass on to me, my cousins, and a number of other folks. But I would love to know your thoughts about how we're doing in the sense of passing on generational wealth. So I'll start with you this time, Donald.
Okay, well, that's an interesting question because it may be like the people who create the wealth are doing it because by some sort of a combination of luck and motivation and skill. And it's not necessarily true that their kids and their grandkids are going to have that same motivation and skill. In fact, if they inherit money, a lot of times they just become, party animals like Trump. I mean, he inherited all of his money. So for society in general, I think that certainly you should be able to leave enough to your kids so they'll be comfortable. But I think for society in general, having aggregations of wealth like Trump, sorry, he doesn't have any money, but Jobs and Gates and people like that. And of course, Gates realized that. I mean, what did Gates do? He's not going to give his kids any money. He started a foundation. He said he's going to give them $1 million. That's it. Which is, a lot, but it's really not a lot. You couldn't buy a house around here for $1 million. I mean, you couldn't even buy a condo. So I think that the fact that there is generational wealth is one of the things that might be keeping some of the minority communities down, because instead of taking that money and investing it in new businesses and investing it in society and investing it in the people, they're investing it in money. And just having more money doesn't help anybody.
Mm-hmm. Mm-hmm. Yes. Another important thing is like when we observe this COVID-19 situation, we have to take preparation for next challenges. Even Bill Gates, he said that next challenge will be climate change. Climate change will be big issues. Even it's a problem for USA, it's problem for different developing nations as well. Country like Indonesia, Bangladesh, India, even Maldives, Sri Lanka, many countries has a lot of challenges and they have to solve these things. What do you think? What are your observations? How we can work together for these climate change issues
Yeah.
Yes, Mr. James.
Sharif, thank you for having me on. I, as I informed you earlier, I have to leave. So this would be my final statement. Both you and Mark are asking very provocative and good questions. But I want to get back to my primary message here, which is build bridges, not walls. And because one of the proudest moments of being a United States citizen was when our president said, Mr. Gorbachev, tear down those walls. And one of the most shameful moments was when we had a president that said, let's build a wall. And now these things, if you have something behind the wall that other people want, they will try to get it. And that will instill conflict. And so what we want to do is get into a more sharing environment, a more sharing idea of tearing down the walls and building bridges so that we can all be in one globe and live in it together. Now, this is a concept that I used to be called a hippie for saying it, and hippie has become a 4-letter word. But I think that this is the future. This is the future that we must, if we were get dragged kicking and screaming. And I love that Professor Donald demystified the myth of Milton Friedman. This is 50-year-old thinking. It is, and there was some good things for Ronald Reagan, what he had to do, because we had this stagflation following the enormous inflation, and then the economy just tanked and was just staring. So Ronald Reagan had to do, but he said that the government was the enemy. The government was the problem. And no, government has got to be part of a solution. And we see this roll out now, the COVID relief bill, they're calling it. Well, this is going to get children out of poverty. Now, isn't that what we all want? Do we all want to get behind children not being impoverished, not being hungry? I think yes. So let's not be so selfish, so self-centered, concerned with acquiring material things that will not make us happy. We have countless stories of people that have got more and more wealth and were never happy. And I think Donald Trump is a perfect example of this. He's always angry. He's always mad. He's always blaming someone else. Now, this is something that we do not want to aspire to as a country. Yet we had a leader taking us down that path. We have a new leader now. We have a new chance. So we must make the opportunity. And this is the thing about investing. When the opportunity comes, be prepared to take it. And being prepared takes work. So be ready to work. Be clear about what you want. Be clear about what your investment objectives are, and be clear on why those objectives suit your needs. Do you want to be part of a just society? Do you want to be living in a just world? Or do you just want what you can get from the world? Ask yourself these questions. Then you'll become a good investor, an investor that suits your needs. Thank you again for having me on the show.
Thank you, Mr. James.
Great to see you, Professor Donald.
Always nice to see you, Jim.
Thank you.
Okay, bye. Mr. Markley, yes.
What were you asking me there? I'm sorry, I was doing several things at the same time, including listening to the very profound Jim and everything. So he's always got some great things to say. But in terms of climate change, I think that it's something that's definitely going to have to be an issue to be addressed, and it definitely needs to be addressed even within the economical nature of things. I definitely know that there's a lot of folks that are looking at solar power, they're looking at wind, and they're looking at a number of other things that unfortunately aren't always seen as being the most economical in the sense of being cost effective, but in the sense of what we need, sometimes you might have to do things that aren't as cost effective in order to have the kind of changes that we need in the world as well. Because I sometimes think that there have been some great things that have happened in our society that weren't always cost effective, but they were necessary in order to have the positive changes. And maybe Donald can correct me if I'm wrong and everything, but I want to say that even when I don't know that necessarily the change in locomotion and the change from coal to locomotion would necessarily have been considered the most cost-effective thing at that particular time in our society and everything, but it was something that was needed in order for us to have a more travel around the country and everything. And definitely the highways were not definitely always seen as being the most cost effective. They even destroyed entire neighborhoods, sometimes in predominantly minority communities and everything, but it's where they were found to be deemed necessary to go to and all of that. So there were some great Black Wall Streets in Tulsa, where I'm at, in Durham, and a number of other places. I would even argue in parts of Georgia, like around Atlanta and everything, but they were needed in order for us to have a more extensive highway system in order for us to be able to get from, say, California to New York or Atlanta to Portland and things of that nature. So sometimes the most effective thing isn't always the most cost effective. But Donald, what are your thoughts?
Yes, Mr.
You're muted again.
Unmute.
You're muted again. Yeah.
I was thinking of the exact same example, the highway system. And there's a lot of infrastructure, our water systems, our sewer systems, so many things in this thing are things that we have to get together to make. And the way I look at government is that it's a way that we can get together to do things that we want to do. As I said, I lived in Finland for a while, and in Finland, they pay huge taxes, but you talk to them about it and they go, well, generally I feel that I'm getting my money's worth. I have health care. I can go to university. I can start a business and not worry that if it fails, I'll starve. There's just they have great roads just right down the line. In fact, the city I lived in had these bicycle paths that went next to the main roads. And when I first got there at 5 a.m., there's the snow and the snow plows. And I looked out my window and they had this teeny little snow plow plowing the bicycle paths. So they feel that they're investing in all those different kinds of things. So it's worthwhile to them. One of the things that strikes me is this whole idea that I'm talking about financialization. So the whole thing of the money that we have in the country being used for the purpose of making more money. And that actually is not an old concept. I shouldn't say that, but if you read Weber, the famous sociologist from the early part of the 20th century, he believed that the job of a leader was to create meaning, create purpose, and that the people would get behind the purpose. And that's what a leader was to do. Now a leader of a company is just completely judged on profit. And I don't know how we can get back from here to there. And I think the United States is probably one of the worst at only measuring things by profit. But there are new metrics. And as I've said before, that we need to start considering well-being as part of it. And then that goes back to the educational system, is we need to start teaching people that they teach empathy in several countries, including Finland. They actually teach people how to be more sympathetic to other people's issues and other people's problems. So it is something you can even teach in school. And that then kind of flips around the whole idea of what you're going to invest in, because paying taxes is an investment. But it's an investment in the society that you're in and the infrastructure for the society that you're in. There's not you can't ask a business to build the highway system, because their competitors will use it, and then their competitors will do better. So it's not, and then their profits will go down, and it's against what businesses do. So I think that people ought to realize that their government and the money, taxes that they pay. The great American jurist Oliver Wendell Holmes said, "I like to pay taxes. With it, I buy civilization."
One specific point I'm really love to learn, even our audience, definitely they love to learn. Example, what you were talking about, your country, especially Finland, they love to teach student or youth community or their people the empathy. And definitely Europe has more social securities and different kind of incentives and other things. So what is the behind the scene story, like how it works, how they focused on more sustainable ecosystem or economy? Yes, what the things they have.
Well, interestingly, in Finland, what happened was that they had a very bad civil war. The wealth was concentrated in the hands of some people, especially they were Swedish descent, and eventually the poor farmers just rose up. Exactly 1917, the same time as the Russian Revolution, and it was pitting family against family and all of that. And when it was over, they all got together and they said, "We do not want this to happen again. How are we going to make a government in a country where everyone is treated fairly so that people won't rise up and create revolutions?" And they were one of the first countries that had women leaders. And right now, their president and everybody but one in their Congress, in their the top government officials, they're all women under 35.
Mm-hmm.
So that's a pretty amazing thing. And the way about empathy is you just have to find ways to get to know people that are different than you and listen to them and listen to their stories. And you can start understanding that the background that people have makes them who they are. They aren't bad people. They're different, but they got that way because of the life experiences that got them that way.
So, like, more on climate change or this kind of things. So, what do you think? How the global community can work together, like solve this COVID, solve different kind of big challenges like COVID, climate change, and these issues? What the strategy we have to build? What the things we can work together?
Well, I think one of the things about COVID that's come out, which is kind of a drag, is that um, the developing world needs the COVID vaccine as much as the developed world, and so we had a policy under that guy whose name I forget, the guy that lost the election. I don't even like to say his name out loud. Um, uh, was, keep everything for ourselves and don't help anybody else, because anything that we give to somebody else is gone, and we won't have it anymore. But that's not the way it works. It's not. That's called a zero-sum game. That's a game where there's a fixed amount of money, and that over time that money just gets shuffled back and forth between different people, and there's never any more. So if you give something to somebody else, you always have less. But that's not the way it works, because if Bangladesh and Malaysia and China and all these countries are doing better, then the world can sell more things to them, and then that makes more. And so we have to understand that we make more by helping each other. And I think that now we're starting to look at having a surplus of vaccines and start getting it out to the rest of the world. And I think that's the right thing to do. Europe already allocated a certain percentage of their vaccines right from the get-go to be able to help people in the developed world. And I'd like to see our country take that attitude a bit more. Again, it's what I said, is that if you really get to know somebody from a different place, a different culture, you can't, it changes the way that you are. If you go and travel to a different country and stay in a different country for a while, it totally changes you, and in a positive way. And there's people in the United States, lots of them, who've never been out of the town that they live in. They live in these rural places. They've never been anywhere. So they get told, oh, you have to be scared of Muslims. You have to be scared of this. You have to be scared of that. And they think, oh, yeah, okay, I'm scared. I'm going to do just what you told me. But we've got to, that would be a part of a really good education, is to make sure that people got to travel a little bit and live with people that are different than them. You're muted this time.
Thank you. Like, you always discuss about entrepreneurship, and you said that entrepreneurs can solve many problem like unemployment, economical problem, and many more things. So for developing better entrepreneur things, so how investors should give support to the entrepreneurs, or do they have to focus on different strategy or something?
Well, it's hard to start a business without money. And so it goes back to the topic of this whole session, which is about the future of investment. And as I see it, one of the biggest problems right now is the financialization of basically investment, where people invest in things that make them more money, and they're not investing in startups, they're not investing in companies, they're just investing in algorithms that make them have more money. And like another example is the whole thing of stock buybacks. So there's a company has a finite amount of stock. If you take the money and you buy that stock back, there's less of the stock. So by supply and demand, the stock is worth more. So it's a cheating way to make the stock worth more. The company hasn't changed. It's not making any more things. It's not doing anything. Its stock is worth more for no reason except for its manipulation. And so I think that I would like to see ways of taxing those kinds of transactions. And it's been proposed to do it, a millicent, a teeny amount, because the amount of money that changes hands every day in these financial transactions is far more than the gross product of all of the countries in the world. It's so much money that's changes hands. And if it became a little less lucrative to do that for people, then they would look for other places to invest their money. Just like he was saying about the bonds, like if bonds don't return anything, then people buy stocks. But then when interest rates go up, bonds are worth more, and so people buy bonds. And so you can, and it's the same with globalism, with climate change. If you tax carbon, so it gets more expensive to use carbon, then people are going to use less of it. So I think that on one level, that's one of the things that might need to get done so that you can make more money available for startups and growing businesses.
Like financial organizations and the banks and everybody, even in developing nations, we are observing many banks, they go for collapse, bank collapse, and many more things actually happening. Do you think this financial institution, they are in right track? I'm not talking about example even Europe or Japan or other countries, but I do more focus on country like Bangladesh, India, Pakistan, or Indonesia, or this kind of country. What your observations like? Banking sectors or investment sector need some restructuring, or yes?
Again, it goes back to the exact same thing. If you're trying to do it in a way that makes it be basically gambling, so it's basically they're investing in money, they're gambling the money, and there's been huge crashes because of that, and that's what caused the housing crash in the United States. Well, it was a global crash in 2007. What happened was that they securitized real estate. So basically what they did is the United States had the ability for years and years for people to invest in mortgages. And but no one did it because it was a terrible investment. And the reason it was a terrible investment is that you couldn't plan, because somebody could just pay off their mortgage and all of a sudden that investment that you had went away. And so this lived as a possibility all the way since World War II, but nobody did it. But then somebody got the idea of taking these mortgages and breaking them down into like stocks. So there was 1,000 or 1,000,000 parts of each of these mortgages. They added a whole bunch of mortgages together, and then they sold stock they sold it basically as stock. So a person could buy a little bit or a lot, depending on what they wanted to do. And because they had a bunch of mortgages, if somebody sold their house, it didn't really matter because there was enough other mortgages around that the whole pool of funds would grow. And that was great. They were making so much money at it that they wanted to expand the pool. And so they started to get lower and lower and lower quality mortgages until eventually it reached a point that all of a sudden, when a recession happened, people couldn't pay the mortgages and it collapsed. So those kinds of pyramid schemes, in a sense, go on all over the place. And you see whole countries completely collapsing because of similar types of investment strategies. And again, it goes back to what can you do? So you take the money that you have and invest it back into the startups, invest it into people, invest it into other things. So thank you.
Yes, thank you.
Well, one thing we've got to do, and I know you're winding down and everything, but one thing we've got to do in terms of investing is find some way to invest in our housing situation. Because I know here in the United States, depending on where you live, the apartment rates, and we're not even talking houses, can be crazy. Because I know there are places of like in New York, California, that a good apartment, and when I say a good apartment, I'm talking about like a 1-bedroom apartment might be running you about $1,500 to $2,000 and things of that nature. So a lot of folks are trying to figure out, do I want to spend that or do I want to invest in a house? But then the housing market is the way the housing market is. So they wind up still spending that amount of money in apartments. I know that where I live here currently, in Durham, I think when I first moved here, it was like around 650 or 700. I expect that within the next month or two, it'll be at about 1,000 as well, because we're pushing like maybe just a few dollars away from that at this point and everything. And there's some other ones that are even more climbing toward New York and California rates, and that's the rates that we're getting right
Mark,
here in Durham, North Carolina.
I just want to quickly say, Mark, you're about $1,000 low.
Right.
Yeah, you're about $1,000 low.
Okay.
So it's 3,000 in
Yes.
California, huh?
Okay. We have our impact investment expert, Mr. Ben Banerjee. Already, we get many calls from Asia Pacific, especially from Malaysia and Indonesia and this kind of country that, like specifically the different corporation from energy sector, from education sector, from healthcare sector, different corporation, they want to know more about impact investment, how it works, what's happening in the global arena. So we will explore today's session as much as with the local corporations, policy making organizations, think tank as much as possible. So Mr. Ben, I think that you can share your experience with our audience.
Thank you. No, thank you very much for inviting me. And I just wanted to add something to what Donald was saying. I missed the whole initial part of Donald's. I think one of the issues we had with I assume that Donald was speaking about the subprime problem, is that the banks, they broke the real, the real economy from, they started creating structured products. And what Donald was mentioning about putting mortgages and things like that under structured products. And that was the cause of the problems, because I wouldn't say it is really a pyramid, because it was not really a pyramid, because pyramid structure is when 1 sells to 10 and 10 sells to 100. But this was a kind of product which was filled of a lot of good things, but also more of rubbish. And the bank was creating a structured product and selling it out. And I think that's where the problem happened. And unfortunately, we didn't learn from it. It's still going on quite strong all over the world. There are a lot of these kind of products being sold with a lot of opaque, non-transparent underlying assets. And that is a major threat to the economy, that instead of people investing in economy, into real, like what Mark mentioned and what Donald also mentioned about real estate or businesses or companies, people are still investing in structured products, which unfortunately are giving higher returns because of what I say, creative accountancy, which is in fact damaging the real economy further. And there is a huge split between real economy and the financial economy. I mean, if you look in New York, if you look at at this moment, the real economy is suffering like anything, with all the, how do you call it? You say it in Dutch, you say faillissements. Bankruptcies and things like that severely going on, but the Wall Street is booming. So there is a big gap between the financial products and the real economy. So I think that's one of the just few, how do you say, few pence of or few cents of my thoughts. So and now coming to impact investment, I thought you wanted me to give a short background of impact investment on a presentation. Can I share my screen?
Yes, you can.
Okay, because you wanted examples, so I just, how do I do it? One moment.
Just share a screen.
I'm not very technical minded. I found it, I think.
Yeah, okay.
Can you see it?
Yep.
Yes.
Okay, now I see nobody, but I assume you can see. You can see the screen, no?
Yes.
Yes.
So,
yes.
But what I wanted to say is that, this is short background on myself. I'm teaching, I'm the head of the Swiss Impact Investment. I have been more than 20 years, and I'm on the board of the Climate Leadership Coalition and East-West Institute from US, and I have been advising a lot of presidents, prime ministers, and governments all over the world, and also major funds, pension funds, sovereign funds, on their investment portfolio, and of course, with the angle of impact investment all around. These are just few of the examples where I have myself invested in. I speak all around the world at the WTEF, at the United Nations, everywhere, and I have been speaking on this topic since a very, very long time. What is impact investment? So impact investment is investment like every other investment, and the intention, of course, is to generate a financial return. But here you also generate a positive, measurable social and environmental impact. So at this moment, as per the GIN, the size of the impact investment, the present size is around 800 billion, which is approximately 0.7% of the global asset under management. So if you look at this thing, you will see the impact investment falls quite very near to the traditional business. So, and it is not social responsibility, it is not sustainable investment. It's a lot of things, but it is completely, if you look, I don't know if you can see it on my screen, it's on the green. So on the left, you have traditional nonprofit, on the right, you have traditional business, and impact investment is quite nearest to the business. And how we look at it is that if your business or if your investment theme is one or more of the SDGs, that is the Sustainable Development Goals defined by the United Nations, then it is an impact. So that's one of the way we can determine or look into impact investment. And you wanted to see some examples. One of them is Choba Choba. We invested in this. So normally speaking, when a chocolate producer sells it, the producer gets the farmers get very little money. This was a company which was started in Switzerland by two entrepreneurs. So here the chocolate producers in Southern America, all over the world, wherever they're producing the cacao, they themselves are the partial owners of this business. And they bring the product directly to the end consumer. So they cut out all the middle income and things. So this will look very much as impact because it works not only as poverty removal, but it's also very, very good product. Secondly, we did this collecting, collecting plastic, waste plastic and everything, and building houses all over. And this, we have invested in a couple of more projects like those, and sometimes with Nordic technology, sometimes with US technology, because US has, especially in Silicon Valley, they're quite very, very innovative and advanced companies and innovations who are doing this. And these houses can be assembled very fast. And these are made for people whose salary is around $2 per day. So they're really the kind of the poorest people. But these houses are also waterproof, earthquake, hurricane proof. And they're using the rubbish to recycle the rubbish and create it. This is one of my favorite projects where we invested. This grass grows more than 3 meters every 3 months. And this grass is also a source of protein, which is good for human consumption and animal consumption. So it's an amazing grass. And it is also taking CO2 out, carbon dioxide out of the atmosphere. So these are kind of examples I wanted to give. This is just a thing about how we are teaching all around the world. And these are a few of our partners. Yeah, this was my detail. So this is what I think, Sharif, you asked me to talk about.
Exactly.
So
yes,
just
yes.
go ahead if you have any questions.
Yes, I think
So-
that is it. Yes, Mr. Markley.
No, yeah, I was going to ask Ben. So those the house you were showing, that was almost kind of similar to what we would be calling a tiny house here and everything. So definitely, there's a smaller kind of model houses that folks can live in that are the much smaller than a standard apartment. But that I know they were becoming quite trendy for a while there here in the United States before COVID. More and more people were looking at getting those. I even had a friend of mine that was living in Vegas and is, I think, moved back to North Carolina that was contemplating getting one of those at one time or another.
Exactly. No, and these houses are specially made for the poorest of the poor. So in Africa, in Asia, so these are for people whose daily salary is less than $2. So these are really small houses, but compared to the fact that these people generally do not have a house to live in.
Right.
So, and not only we build the house, but we also make it financially viable for them to pay as time goes on. So they don't have to pay for it from day one or something. They can pay spread over a period of 5 years or 10 years. So it's not only about collecting the waste, building the house, but also arranging the finances for them so that they can afford to rent or buy these houses. And it is for 4 years, 5 years, something, and then they become owner of the house.
Yeah, it's interesting that you say that and everything, because I know I was just talking to a friend of mine recently, and we were actually saying, and Donald may know this as well, that here in the United States, there is actually enough houses to actually house everybody, but we still have, even here, a homeless problem because some folks can't move into those houses, even though they're available. There's a number of housing units that are sitting empty, but the people can't afford to pay for them. So it sounds like what you're doing is giving them something that they can afford to pay for because it's so low cost.
And we are taking wastage out because it is being recycled plastic, recycled waste products. So we are cleaning up their area also.
Excellent.
So these are just few examples of impact investment.
Yes. Yeah. Professor Donald, you want to add some point?
The mute
Donald,
again.
you are muted.
Now that my wife has left and isn't banging around the kitchen, I can leave the mute off. But you didn't want to hear the tea kettle boiling in the background. But Ben got here a little after, but I really want to echo what he was saying is about financialization, which is people are making money on money rather than actually doing something with it. And that's historically, that's what collapsed the British Empire. So it's not a good thing. We have a person that's on this show a lot who makes tiny houses. Yeah, he does that. I don't. I'm kind of a little distracted right now, but so why don't we just keep going around and I'll listen to everybody else, and then in a few minutes I'll be less distracted.
Okay, no problem. Mr. Ben, there is a specific questions from our audience, like how can someone invest in a startup company safely? Are there any index fund portfolio that focus on startup companies?
Yes, indeed, there are. Although impact investment is very often focused on growth companies, but startup and mezzanine also happens, although relatively much lesser. The criteria you can, if you go on the web, on the site gin.org, that is GIIN.org, there is a platform called Impact Base, and there you can find all the funds, and you just have to check the criteria. Every fund has their own criteria.
Okay, even though from Asia Pacific, what we understand, even the China Belt and Road Initiative actually moving forward with their investment and other things. So as you are in Europe, so how, like example, Asia Pacific make a good collaborations with European investment companies and organizations to make a better ecosystem for their countries, or what the process?
It's a very complicated question. So
Okay.
It depends on who is the person, who is the party on the other side of the table. Is it the government authorities? Is it the business community? Or is it an individual business? So if it is a government authorities, they can, of course, approach via, there's a lot of government, like with the World Bank and European investment banks and a lot of banks. So they can, the government itself can say, for example, we take 20 billion or 10 billion for infrastructure projects, and then the government itself decides from the 10 billion, so much goes to housing, so much to railway, whatever. That is one way. If you have the business communities, that's where we also teach and train them, is that they can themselves make a good study about what is impact investment, what are the funds, the resources, knowledge, expertise available. And I am very lazy, so I don't believe in reinventing the wheel. Most of the technology, most of the things are already there. It's just a matter of finding them out. For example, in the Nordics, in Europe, or in US, they have a lot of technology available, which is very easily applicable also to Africa, Asia, everywhere, especially because US is such a big country that they have the climate from one side, from the cold climate to the warm climate. So their technology that they are using in their desert or in their hot areas can just as well be used in warm parts of Asia and warm parts of Africa. So it is just a matter of finding these technologies and implementing them instead of trying to create it themselves. So that is from the business community point of view, and we support a lot these business communities everywhere. And the third will be the business itself. So if it's it's a business who wants to set it up or who is looking for financing. So what I would propose is that they should really, that's what we teach them how, number one, what is very important is the core of the business. So impact investment doesn't mean that I produce tobacco and make everybody smoke cigarette, but I give job to 50 people, so I'm an impactful business. No. Impact business means that your business itself, the core of your business is to do one of the SDGs. Secondly, you look at the business processes. Are you implementing the SDGs also in your internal business processes? And if you fulfill, and the third is the measurement and the reporting, because getting funding doesn't mean that today you're a clean company, you get funding, and from tomorrow you can do whatever you want to do. No, the investors will require a yearly reporting on your criteria which you have promised to fulfill. And if you do these things properly, then there is immense funds available. Whether you're talking about the European Investment Bank, which has put aside more than €1 trillion for climate-related projects, to the sovereign funds, to the pension fund, there's immense funds available. But you have to fulfill the criteria, and you have to keep a certain, and that's not a problem. Oh,
Yes,
yeah,
Mr.
Mark, go ahead.
Yeah, I had a quick question. I know I've had the pleasure of meeting Ben a couple of times in different platforms and everything, but one of the things I was curious about is, are there any kind of, like, within your company, are there any kind of pitch contests? Because I know there are pitch contests that are very popular here in the Durham Triangle area, where a lot of times people will be trying to pitch their product and everything. And also, is it strictly for any size business, or could, like, a small business, like I've got a friend that owns a restaurant called Zwelly's, and they do a lot of things around he and his wife's company, and they're a Zimbabwean themed restaurant. So they're not a big company, but he's part of our local chamber of commerce. But that would not be a big company. So is there a size limitation? Because they're also doing a lot of things within the kind of trying to create a better ecosystem here in our area, but always looking for funding and possibly even carrying some of what they've learned back to her homeland of Zimbabwe. But I was just wondering, are there size limitations, and are there any pitch competitions?
Yes, that's the problem we are trying to solve. So originally, if you look at the major, because impact investment has been the how do you say it? the game, the play field of the big guys. So
Right.
whether it's the pension funds, but then they always talk about 10 million, 50 million, 100 million, all these big amounts. Problem with that is that normal, if you look at the emerging countries, a normal business does not need 50 million or 100 million.
Right.
They need much lower value, whether it can be 1 million or even 500,000. I'm talking in euros, I mean, which is at this moment same like dollars. So what we have done is that we also have now a lot of funds, because it's very difficult to get it from the institutional funds, but we have funds which are getting from the institutional funds, and these funds are investing in the smaller projects. So the answer to your question is yes, it is possible, and it is getting more and more possible because we are trying to bring impact investment to the retail level, because till now it has been very much on the institutional level.
Gotcha.
Thank you. I directly want to go for the concluding remarks for today. First, I request Professor Donalds, then Mr. Markley, and finally Mr. Ben. Please unmute yourself.
You gotta help me.
She came back, so I had to mute myself. So I want to talk about something that the others said, which is that first off, that's what venture capitalists are. Venture capitalists are people who take other people's money and invest it in companies. That's what they do. So by if you want to find a way to put money into some sort of a fund that's investing in startups, look for venture capitalists. And venture capitalists, you kind of have to ask around, because some of them claim they invest in startups, but then you ask, well, what do you mean by a startup? And they say, well, it's a company that's less than $1 million a year, revenue. And you're like, wait a minute. I mean, more than $1 million a year revenue. So you're just like, okay, well, that's kind of the catch-22, because you're a startup, you're not making any money yet. And so they won't invest in you. However, as Ben said, there are funds that do invest at that level. Another thing that I want to mention, and I'm hoping Ben will address this in his closing remarks, which is that there's in Silicon Valley here, we have lots of pitch contests. I've probably been to 1,000 pitches at pitch contests here, and that's kind of a side note. But if an investor invests in a company, they want to be able to get their money back. They want to get their investment back. And so what winds up happening is that we just roughly divide companies into two piles. And one of them we call lifestyle businesses, and the other are basically everybody else. And a lifestyle business is something like a restaurant. It's a place where you own this business. If you make a good living from it, you could make a very good living from it. I mean, you could, be a pillar of your community. You hire people. You're just, it's a great thing to have done with yourself in your life. But the investors have trouble getting their money back. So really what happens is, in a lifestyle business, you loan them money. And by you loan them the money, they use the money to increase the business and then pay you back over time, just like any loan. Investors have a tendency to, here it's absolute, that they won't invest in a business unless there's going to be a liquidity event. And what a liquidity event means is you sell it. And you either sell it to the public markets, which is called doing an IPO, an initial public offering, or you sell it to Google or somebody else like that. And companies sell for billions. Google will buy a company for $5 billion or $10 billion. I mean, they have so much money, you can't even imagine it. But I'm interested in how it can work to invest in the kind of companies like Mark is talking about. That would be interesting. And then for yourself, as Ben said, there are lots and lots of places available. And if you're going to start a company, I'm going to close with saying, if you're going to start a company, you need 3 types of capital. You need financial capital, you need human capital, and you need social capital. And you will not succeed unless you have all 3. And so we've been talking about financial capital, but social capital allows you to do the kind of thing that Ben is talking about, because as he said, the solutions are here somewhere to many problems. They just aren't in Africa. They're in Arizona, where it's hotter than the blazes, but they're not in Africa. So if you here, through your friends, through your social capital, you can learn to start businesses. As I said so many times, innovation isn't somebody thinking up something completely new. It's taking something from one place and applying it to someone else. And then, of course, human capital is simple. It's the ability, the technical ability and intellectual ability to actually do what needs being done. And so, thank you very much. I always love being on your show, Sharif.
Thank you. Thank you. Yes, Mr. Markley.
Yeah, I was just actually going to dovetail on some of the things that Donald said and everything. One, as definitely as y'all know, I'm here in the Durham, North Carolina area, which is, of course, associated with Raleigh and Chapel Hill. And we're actually seen as kind of like the Silicon Valley of this area. So kind of the innovation capital of the Southeast and things of that nature. So there are a lot of innovation companies that are coming up, and they're doing some very innovative kind of work on all kinds of areas, everything from some companies that I know that are dealing with solar power to a company that's dealing with a new way to charge the phone and a number of other kind of creative things that are going on. But to come back to something that Ben was talking about, we're also very much of a creative community, meaning that there's a very active creative community here in this area as well. And that being said, it kind of reminds me of what a friend of mine told me about promoters, and that meaning music promoters. And he would tell, because he used to be the rental coordinator of a local theater here, he would say that there was always great promoters that had great ideas and great thoughts, and they were amazing promoters out there until the most important thing came, which was the time to sign the contract and write the check, because that's when he found out who the real promoters were. And I would argue the same thing about investors. Everybody is an amazing investor until it's time for them to actually write the check and prove that they are going to invest in what you are interested in. And there are a number of folks that are able to invest in lifestyle projects, in things that might be considered more of the lifestyle artistic kind of things that I'm very much involved in, whether it's music, whether it's film, or whether it's a number of other things. And that's why sometimes they will tell you that you need to go first to the friends and family plan and all of that, and address and try to find friends and family that will help you in the project, because they will know your passion, they will know what you're about, and they will definitely be the ones that will be at your corner the most successfully and everything. But don't stop from going to see the investors, but do know what you're heading into. I remember one time a friend of mine and me, we organized and we went and talked to a lot of folks, and then I'm gonna wrap it up and everything, but we talked to a lot of folks about investing in a friend's film. And the friend still wants to do this film some 10 or 15 years later. So we got a prominent attorney here in this area, set up in his nice fancy office and everything. And we had met with all kinds of doctors, lawyers, and Indian chiefs. And they all said, sure, we'll be at the pitch meeting. We'll be there. We'll be there. And we were on the second floor. I think I saw one car drive by, and except for those of us that were at the meeting and everything. And I remember going back to him later in the car that I recognized and was like, did you? He's like, yeah, I drove by. I didn't see anybody. So since I didn't see anybody, I didn't come to the pitch meeting. So definitely just know what you're getting into when you get into it.
Yeah.
So that's one of the things that I would share with our audience that is watching.
Thank you, Mr. Ben. Yes.
Oh, I'll just answer to what Donald said. I think it's a very, very right point what Donald and Mark both mentioned. So, but if you look how the impact investment community evolved, so initially it was a couple of old families in Europe, like the Brannick-Myers and a couple of other families, who purposely, they were into philanthropy and into charity. And same is valid also for the Rockefellers from US. But then they started using their power of investments to more and more move towards something which is good. They did not pay too much attention to the return. They were more interested in the impact. So it was a completely different breed or different creed of investors who would invest into these kind of businesses. But that is now slowly changing. Now, because of the COVID and because of the climate change and the awareness and the millennials and all these new variables coming into play, now more and more people are looking into impact investment, no more as a kind of small place for certain greed, a certain creed, or certain sort of investors, but it is also becoming investment for every Tom, Dick, and Harry. I mean, that's a Dutch term saying. So anybody here, and there are more and more people, I don't know in US there's numbers, but in West Europe, I know that more and more people are going to their banks, even people who have 1,000 francs or 2,000 francs, going to the bank and saying, I want my savings or I want my investment into something which not only gives me a return, but also is doing something good. Or like the Faith Invest, I don't know if you followed it last Friday, that there was a quite clear exclusion criteria that we will invest in everything except this. Now they're turning it the other way around. They're calling it the investment with values or value-based investment. That means it's not about that I'm not going to invest in family planning or drugs or weapons, but I will invest in something which is doing good for the society or women empowerment or the reforestation or environmental protection. So there's a shift from exclusion to inclusion and value-based investing. So I hope, Donald, that I answered some of your questions with that.
Thank you, thank you for joining today's sessions. I want to give special thanks, Professor Donald, Mr. Benz, and Mr. Mark, for give the guidelines, especially the youth and the policymaker in Asia Pacific. Actually, World Talent Economy Forum, we do not believe only in the roundtable discussion or policy level discussion. We implementing different kind of project like energy, water, constructions, even different kind of startup and technological company. We are helping each others, and this is the way we are growing. And we have our expert like Mr. Ben, Professor Donalds, and Markley. Already we do tie up with Swiss Impact Investments. So hopefully from May you can attend. Those who watching observing today's show, they can join in our training programs, as well as we develop our summit and other things. And especially I know that many of the organization, especially small medium enterprise, those who have strong engagement in education, water treatments, energy, and many more things, they are interested to work with World Talent Economy Forum. So I believe that with the help of this kind of professional people like Mr. Bain, Professor Donald, even Mr. Markley, we can make a better ecosystem, and hopefully it will be very effective ecosystem for us. Thank you for joining today's session. Thank you, everyone.
Thank you.
Thank you.
Bye-bye.
No problem. Thank you.
Bye. Bye.
Bye.
Take
Nice
care.
to meet everybody.
Pleasure to
Bye.
meet you.